Hey, good afternoon, everybody. My name is Paul Chalmers, and I'm the CEO of UK Trading Academy. You don't need to know much else about me. I'll tell you a little bit more later on, because what's important is the subject that we have. And we're talking about AI and algo trading. And there is a very, very big misunderstanding of what AI trading is and what algo trading is. And what I'm going to do today, I've been asked specifically by the IFX team to explain to you in very simple terms. This is not going to be complex. I hope I'm not going to be able to put you to sleep. I don't normally do when I come on. I'm very well known for interacting with everybody who's on the stage, but I'm going to make it as simple as I can. I've got about 30 minutes. The only concern that I have is that already I've been commentating on the Trader Cup. Wow, that's exciting. So I've already done nearly 2 hours of talking. So whether his voice is going to last totally to the end, I'm not sure. But I'll try my best, and I got some water as well to be able to help me. So let's talk about the future of trading, because we really are talking about the future of trading here. And I want you to understand the differences between AI trading and algo trading, because there is a very, very big difference. But there is a lot of people who don't really understand. And if we look at the world of trading nowadays, it's changed a lot. The markets don't move like they used to. Yeah, they are changing dramatically because we have so many geopolitical uncertainties in the world now. There are so many things happening. Donald Trump creates most of them, actually, if you think about it. Yeah, he's great. He must think to himself, hey, I'm going to short gold today, and say something that does that. I would never say that he's an inside trader, but you know, the way that the markets are moving at the moment are so different compared to what they used to do. And also, there's been this interest rate shift. You know, a lot, especially America, want to get those interest rates down. Donald Trump wants to get the interest rates down. But of course, we have this fight at the moment between the Fed and the president as regards interest rates, because the president wants interest rates to come down. But the thing is, as we all probably know, within fiscal requirements, you use interest rates to control inflation. So interest rates coming down can have a negative effect as well on inflation. We could see inflation running like mad in the US. Also, the dollar is weakening all the time. So we're getting different types of inflation cycles happening, and different types of interest rates cycles happening that we didn't have before. And of course, it affects all the markets. If you're a CFD trader, it's going to be affecting all of those markets that you trade. And also, volatility has become the norm. Volatility nowadays is not occasional. It's part of the structure of the way that the markets are moving. So therefore, I don't believe this is not going to be a temporary phase. Okay, it's going to become more the norm for the markets. And that means that this has an impact on the way people trade, how you used to trade. The technical analysis that you did, the fundamental analysis almost gets blown out of the water, because there is something happening constantly within the markets that are moving the markets outside of the norms. What we are looking at doing, and I see a lot of traders struggling because, since 2010, when UK Trading Academy started, my company has helped over 180,000 students. So I know how students think. I know what they want. I know what they get disappointed with. I know that they need to be able to get the right information to be able to trade accurately. The markets are reacting far faster, and this is obviously due to the volatility, and things that people may have done before don't work now. If we look at indicators tells you what you should have done 20 minutes ago. They're totally useless. There's hardly any indicator in this world that tells you what to do when you should be doing it. It normally tells you too late. And there's a great conspiracy theory that a lot of these big institutions actually made a lot of these indicators, because what the institutions do, as you know, is they draw people in to a trade and then take the market the other way and take the profits. So if an indicator can get you in late, boy, are they rubbing their hands. It all makes sense. Yeah, it's common sense. A lot of people don't talk like I do on stage, so you're going to get the basics, the facts, exactly what you need to do and how you need to do things going forward. And I don't want to mention Mr. Trump too many times, but we get so many before. If you go to Forex Factory, you'll get the news items. What's coming out at 11 o'clock? What's coming out at 2 o'clock? Now we have people who have great influence. I keep mentioning the president, but like the president, you're getting news outside of the normal news structure. And that is causing people problems, because when they're going into a trade, they never know what's coming next. Where before, there was pretty much a planned sort of calendar, of news announcements. And people are starting to overtrade. They're getting into trades. The market's whipsawing. It's moving in a different direction. And they're starting, I've seen with some of my students, that they're starting to overtrade. Now, when you start to overtrade and allow the markets to control you, emotions go out of the window. As I said, I've just been for the last hour doing the Traders Cup. That's take your brain out and just press buy and sell and hope something wins. That's what it is. But some traders, more traders, are getting caught into that because they don't get trained properly on one of the most important things in trading, and that's risk management. Hardly anybody really knows what risk management is and what it should be. A lot of the things that came out, let's miss AI for a second. If we look at all of these people peddling things on the market and have no knowledge of trading whatsoever, a lot of these strategies that people are using and indicators that have been generated are all been generated 10 or 15 years ago. So people are still using the same ideas, the same trading patterns that was designed 10 years ago, and we're in a totally different environment now. So the problem isn't the trader, it's outdated education and then understanding of what the markets are now doing. So let's talk now a little bit about AI versus algo, because that is the main topic. And again, I said it's not going to be complex. I want, when I explain things, it's normally very simple. People can understand a complex subject simply. So I'm not going to use crazy words that nobody can understand. I'm going to explain it to you very much ABC. We know now that automation is everywhere. No matter what you do, automation is everywhere. Automated trading. It started many, many years ago, obviously, with EAs, expert advisors. That was the first start of automation, but that's long, long gone. And what we have now is that people are selling artificial intelligence. Well, they tell you they are. But I would say 95% of all the indicators now that have AI attached to them, it's just being used as a selling point. It's a load of rubbish. There's no AI attached to them whatsoever. So I want to strip away this hype that we have around AI at the moment so you fully understand what I'm talking about. Sorry, I've been ignoring you guys. I've been talking to these over here. Let's change for a minute. So I want to try and explain what really works and how AI works in the industry compared to what you used to use as algos. And what I must say is there's nothing which is right or wrong. It's what suits you as a trader. That's what we need to understand. I've got quite a lot of content to explain to you, so I'm going to go through rather quickly. It matters a lot now that you need to understand how the markets are working, because there are so many tools out there, people get overwhelmed. They don't know what is good, what is bad, what they should use, what they shouldn't use, because everything is hyped up as the next holy grail. And within internet marketing, AI has become a buzzword. People and marketers are using the word AI in pretty much everything they do now to try and tempt you to be able to buy. But as I said, I bet you that 95% of what's out there that people say is AI is a load of rubbish. It is not, because they don't even know what it means. The wrong tools mean blown accounts. Just quickly, for traders in here, who's blown their account? Yeah, I get a lot of people putting their hands up normally. With the right risk management, it's impossible. It's absolutely impossible to lose your account if you use the right risk management. But the thing is, automation and what we have now, it can magnify the good, but it also magnifies the bad just as much. So I'm going to ask the audience a couple of things. Who trades manually? Okay. What about using algos or AI? Sorry, or EAs, not AI. Okay, algos or EA. What about AI? Have anybody considered using artificial intelligence? Okay, not many, because the reason is a lot of you don't know what it is, so that's the reason that I'm explaining it today. I'm going to kill the confusion first of all, because if you look at AI and you look at algos, these terms get mixed all the time. Yeah, and that's why it becomes very, very confusing. Now, an algo and an AI system will both do execution. They'll both place a trade. Okay, so they're doing the same thing, but the intelligence behind that trade being executed is totally different. And that's what you need to understand. This is where the differences are. It's the decision making that is made within the algo or within the artificial intelligence software. They are worlds apart. They really are so far apart, it's unbelievable. And I'm hoping I can give you that bit of information. And it's going to be, as I said, the norm for the future. With Algo, making it very simple, it's rules-based automation. Okay, so you have rules. You're going to have logic. If X happens, you do Y. If A plus B plus C happens, you do Z. It is a logic. It is a software which has been designed by a software engineer that will do certain things on certain commands. Okay, so that's Algo. And a human has coded that. And it doesn't learn. It doesn't adapt. It's just like a regimented soldier. Yeah, you will go out and you will do this, and off they go. Yeah, that's what happens. So that is what an algo does. Now then, what an algo is very, very good at doing is following instructions. If it says that the RSI is down below 20% and something happens on an EMA and an EMA has crossed down, the 9 and the 20 have crossed, then you place a buy. Right? That is what algo trading is. And it does have both strengths and weaknesses, which I will explain a little bit now. So if we look at the strengths of algo trading, there is no emotion to it. Yeah, if the software says this, it automatically does it. It doesn't hesitate. There is consistent execution. It'll always be placing that trade if that is made. And it's very easy to backtest, because you're backtesting something which has logic to it. And it never revenge trades. It never tires. It'll keep going for the next 1,000 years. So long as that computer's running, it'll follow those instructions. So algos do what they are designed to do. Okay, so that's algo. So you understand exactly what algo trading is. Now what I want to do is explain the weaknesses of algo trading, because they cannot adapt to markets. They are programmed to do something in a certain way, so they will do it 24 hours a day, 5 days a week. And of course, you see a lot of these algos, and people are saying, "Oh, we've lost so much money." There may be an algo that says, if the market moves a certain distance, then place a buy. And if it carries on, place another buy. 4 years ago, I was involved in something where an algo went mad, and it lost over Christmas, between the 23rd of December and the 1st of January, £4 million. An account went from 4 million to 0 within 7 days, and it was trading, I think, New Zealand dollar, US dollar or something, and it kept moving down, it kept placing buys, because it's just doing what it says. The RSI kept under 20. It was going down and down and down. And of course, it leads to a false sense of security, because people are saying, well, the algorithm's been made, it's going to trade in a certain way, I am going to worry about it. Wow, many people have lost a lot of money because of that sentence. I haven't got to worry about it. So it has rigid logic conditions within that algorithm that it will always follow. And it doesn't change with conditions. So now what we're going to do is we're going to look at AI trading. From my point of view, if you look at the speaker's view, as much as that is worth, AI is basically really not understood by people. People think that AI can do amazing things. It can. But at the end of the day, the way that I explain it to people when they're saying, well, AI can make me a system that's going to make me a load of money, yeah, in trading. What you have to understand is that AI is a child born, but with the knowledge of all the years since we existed. Because all AI does is take the information that's already out in the marketplace, out in the world, and that's its starting point. So instead of a little baby, which has no knowledge at all, yeah, apart from if you poke it in the belly and it knows touch or something, that's about it. My daughter's about to have twins, so I'm going to be a granddad. And what happens is that it has to learn from that point onwards. Okay? But what it is it's very good at analyzing the data that it already has. So it's a baby born, but has like a chip inserted into it with all the knowledge that ever happened in the world. And that's, of course, where you get issues when people are selling things. Because they use ChatGPT or some of the other AI tools around to make you trading courses. The only problem is, over 90% of all traders lose money. So the data and information that it's going to take to make you a trading system, 90% of people are losing anyway. So it's taking information that is no good. But what it is good at is from the time it's born, then it starts learning. And that is the difference between algo and AI. So that's my view. And it's very data-driven. It's going to look at the data and the information that is there. This doesn't follow rules. It's not the rigid army person anymore. Yeah? It goes out and it explores and says, what can I do? What is the data available? How can I change the current thinking that I know from the past 1,000 years or whatever it may be? How can I change it so that it's starting to become suitable for modern ways of trading, modern ways of thinking? So it doesn't like rules, because if you rules, you're too rigid. Yeah? That's somebody who's been brought up to work in industry to get given a salary at the end of the month, yeah, and continues to work like that, no matter how well or bad they do. AI is the entrepreneur. It says, what else can I do? What can I look for? What information can I get? What can I start detailing, learning from, that'll help me to be improved in the future? So it improves with the experience. So when we're looking at trading, what it's doing is looking at the markets and see how the markets are moving and saying, well, this is the information I had before. How do I need to change what I'm doing to be able to be successful in the markets that we have at the moment? So it adjusts its trading to the trading conditions you currently have. And I'll give you a little example. We trade managed funds for people. And I built an algorithm. I did electronic engineering, so basically it's 95% maths and a little bit of electrical. Yeah, that's what it is. So I've got a bit of a mathematical brain. So I've generated algorithms which made money for our customers. This looks at market situations, and it has got thousands of market movements over a short period of time. And what it did is it said, if this market movement happens, 70% of the time that it happened in the last 1,000 trades, it went up, 20% flat, and 10% down. So now I know that if I place that trade, I've got a 70% chance of winning, because over the last 1,000 trades, it's done it. But then what happens if the markets change? All of a sudden, the market movement changes. This is where I've added AI. Now, this is how you use AI, because what I say to AI is, go back and have a look, and now monitor the current markets. Yeah, look at what the markets are doing now, and it'll find different movement patterns, and it starts storing them, and says, okay, this is an unusual one, I haven't seen this one before, and it will start looking every time to see when that happens. So not only have I got the past, now currently I'm developing the future. Sorry, I'm not. The AI is developing the future, because what it's doing is it's saying, I'm monitoring different market movements. So if the market's different, if it's more volatile, I don't care, because it's learning all the time. And once it finds another movement, another type of movement within the charts, and it's got 1,000 of them, it'll tell me what's the percentage up, down, or flat. And I'm only taking trades which are normally 65% positive in one direction. But I hope you understand the difference between an algo, working as it was, and how AI develops that movement and looks at the latest market movement. Because now, what AI is doing for me is it is actually saying, hang on, things are changing. I'm going to start monitoring that and then see how we can benefit from it. Okay, so that's the difference between an algo trading and adding AI. So if we look at how artificial intelligence actually trades, it is going to be data-driven decisions. Okay, it's all to do with data. It doesn't follow rules anymore. It doesn't look at these indicators that tell you something you should have done 20 minutes ago. And it also learns from the outcomes. So it's adapting itself all the time going forward. As it's moving along, it's adapting itself to make sure that it is looking at the latest market movements and seeing what they are doing, not relying on the past. And that is an important sentence, not relying on the past, because the past, slowly but surely, is not working. And obviously, it weighs outcomes. If you look at the outcomes, it's weighing the outcomes all the time to make sure that you have an edge. Because it's pointless it's spurting something out and there's no edge in it. You have to have an edge, and that's what AI is helping do. So that is a massive shift in psychological thinking for people. But I suppose the next couple of slides will help you a little bit more understand one thing, and that is AI is not the Holy Grail. The strengths of AI trading is that it adapts to volatility. As I said, it is watching what is currently happening. And something that I'd have 1,000 people doing is evaluating data. Millions of different movements of all the different markets. People can't do that. This is what it's good at. It actually handles all of that data very, very quickly and adapts the algorithm. Okay, so we're starting to see that this is something quite special. And of course, it reduces human bias because it's doing it for you. It's not thinking maybe something can happen. It's checking that something happens or it doesn't happen. As I say, it's looking at that data. And the quality of data does matter because bad data, yes, something bad in gives you something bad out. So the quality of data is very, very important, and it matters a great deal. And there's not a lot of good data out there. And of course, you've got this thing which is black box risk. At the end of the day, it's doing something for you. You are relying on it. Yeah, you are relying on the fact and what it is giving out to you. And also, there's a bit of an overconfidence danger. I got AI. No problem. I'm down the pub. Yeah? No, that's not the case. That is not the case at all. And you have to understand that AI trading does not remove the risk. It just moves it somewhere else. But the risk is still there, and you need to evaluate that risk. So when we look at AI versus algo side by side, algos provide consistency and they provide discipline in trading. Some people like that. It also, AI is adaptable. It is adapting to current situations, so that it doesn't matter if the market does change, then it's going to keep up with it. Okay, it's going to be saying, I'm watching you all the time, you know? And as I said to you in the last slide, they both need risk control. Risk management, you can never get away from. A trading plan, you can never get away from. The people who don't do that tend to blow their accounts, okay? But also there's skills in being able to do risk management as well. So think of it as a toolbox, okay? This isn't a battle between algos and artificial intelligence. You're adding tools to your belt, okay? When I was in industry, I would add tools to my belt. Know about quality, know about engineering, know about design, know about finance. You're building your toolbox to make sure that you have tools that you can use in the right situations to make money for yourselves. Okay, so who should use algo trading? I've put this up because different people think in different ways. Different people have different risk tolerances. So algo trading is more for people who are more structured. It's also more suitable for stable market conditions. And as well as that, people who value control, you've got a little bit more control yourself within an algo. But also, the people who should be using artificial intelligence, people who love data. They like to see data to be able to make decisions on. Maybe a portfolio style of management. They have a portfolio, and this is just one of those things. And finally, traders who accept probability. In other words, they're happy to trade on something that they know over the long term, the probability will be in their favor. Unlike going to a casino where the house always has the edge, yeah? So, biggest mistakes that traders make. First of all, traders like chasing technology. I've seen people who keep chasing technology all the time, never actually place a trade because they're saying, oh, this is better, let me watch this. Or this one's better, let me buy this. And they keep going and going and going, spending money, but never actually trade. It's a very unusual but horrible circle. And they avoid the risk management. Risk management is so important. I provide a master's degree, the only private educator in the world to be able to provide up to MBA. The biggest sections of the master's is psychology, trading plan, and then risk management. It's that important. And also, as I said to you, you don't turn around and go to the pub, or whatever you may do, or go play paddle or something like that. It's still important. There's a human touch that people don't realize is needed, whether it's algo or whether it's AI. So therefore, there is no holy grail. AI isn't going to make a holy grail. It's only going to give you better decisions. That's the difference. It's giving you better decisions because it's analyzing constantly what the markets are doing and giving you the best opportunity they can give. Okay, so, oops. Clicker's working. There is, I believe, and that's what I'm doing. That's why I wanted to explain to you the strategy and the algo that I have generated and the AI that I've added to it and how it works for this next slide. Because I think AI is great for decision filters. It makes those decisions for you, where algos are very good for execution. So there's a hybrid model, which I believe the most successful traders for the future are going to be using. You're going to be using both. Both together, both for the skills that each one of those has. And obviously, human oversight remains key. As I said to you, it's not set and forget. What we have to have for the future isn't AI or algo. I believe it's AI and algo. Both together, working together to give the benefits of each. And the way forward, you need to understand the tools that you are using. You need to match the tool to your psychology. Okay, you don't have to go AI, you don't have to go algo. It's suited to your psychology, your risk management. And as I said, controlling the risk above everything is the most important thing. And automation should not support decisions. It doesn't replace them. It supports the decisions that you're making. Okay, a little bit about me. I said I'd leave it till the end because you didn't really want to know too much about me. You want to know the information I've been asked to give you, and I hope I've given you a better understanding now of algo versus sorry, I got somebody watching. Algorithms versus AI. So I've just got 2.5 minutes, so this is really quick. I've been trading for about 25 years. I've spoken in over 17 countries, major events in over 25 cities. I'm the founder and director of UK Trading Academy. That is one of the longest running and largest academies in the world. Also professional investment fund director, a PIF director. Since 2010, my company has trained over 180,000 students. That's more than any other academy in the world. And we are the only private educator in UK and Europe, and in fact, it's the world who can provide a fully accredited, internationally recognized qualifications all the way up to MBA, an MBA in financial trading, the only one outside of the universities. And I'm very proud of that. A little bit about my company, and you can see why we make great results. The UK Trading Academy was started in 2010. By 2013, we were doing fund management. We then got the license to the market index. The market index is a very special data feed which comes into the main institutions. You wonder why they do things properly and can make money? They can see what the markets are doing before anybody else does. I have that. It's streaming into our service. One of the only private companies in the world to have that. As I said, professional info directorship. Then in 2022, we became accredited to do diploma, and then 2024, the MBA. And this MBA is very, very special because you can do it outside of your job. You can do it around your job. So we have a very high-performing institutional trading team. I got a great team of traders. As I say, we bring the best data in the world. You know, it's what the institutions use, the big institutions use to trade. We also now, we pioneered AI technology, bringing algorithms with AI into it to be able to allow our students to trade. And as I said, we are a fully accredited higher educator. There's the accreditation. There's our academy in the UK. So we're accredited through Aspire. And the full range of services that we do, MBA, Diploma, Certificate in Financial Trading. Our Pro Trader course, which is the MBA without the MBA. That is fantastic. And Forex Basics for those who just want to start understanding. And we also do trade opportunities. We're live 12 hours a day, the only academy in the world who are live 12 hours a day. And you can see the trades that our institutional trading team are placing live on a webinar inside the members area, 12 hours a day, 5 days a week. And we also do the managed accounts. Little bit of news, and this is the last slide. We are opening UK TA in Dubai. We already have the approvals. We already have the KHDA accreditation to be able to do that. And we've signed contracts with 3 major companies in Dubai. And that goes from marketing through to brokerage, through to an academy which is very well known in Dubai that are now going to be promoting our courses. And as I say, we just had KHDA approval for the courses. I'd like to thank you all for watching. I hope it has been of some interest. And hopefully now you have a little bit more knowledge about what AI is, what Algos is. Thank you very much, everyone.